Hello, hello, hello. Welcome now, Stock Trades. In this video, we're going to go ahead and do a technical analysis 101 breakdown. Let me go ahead and give you a quick disclaimer. Now, as you may know, you've been watching my videos for quite some time. I speak a lot about the fundamentals, but you have to understand I also am an expert in day trading, okay? More specifically, swing trading. So in this video, what I'm going to be giving you is a nice breakdown, but the disclaimer is when a lot of folks go ahead and talk about technicals, they separate them from the fundamentals, and I'm going to speak upon that perspective. When in reality, we like to mix these two approaches together, the fundamentals and the technicals, to give you an edge like no other. But for the purposes of teaching, you have to separate it, and we just have to talk about the numbers. So without further ado, we're going to go ahead and see. There it is. So we've pulled a quick little lecture from the mastering. We're going to be implementing majority of these lectures with inside of the Al Stock Trades, but we wanted to go ahead and put a baseline for our YouTube subscribers. So in the future, when we do talk about stocks, we're going to have this terminology that we both understand, okay? So without further ado, let's get started. So first things first is we want to go ahead and dispel the market myths, okay? So the whole buy low, sell high, right? It's always like you always have people in extreme, when in reality, sometimes they, buy high and they sell low. The second thing is you don't want to rely on financial news or Wall Street experts for profits. If you go ahead and just kind of take a screenshot and time CNBC's call outs on stocks, you can see that they purposely get it wrong on purpose because they're not working for you. They're working for the hedge funds. Market professionals base their decisions on market actions, not news. Okay. The whole market is based off of price action. Now you may be looking at yourself like, Al, you've been saying fundamentals, but again, I'm speaking from the technical perspective, which does guarantee truth because those technicals are basically mathematically modeled with quant trading algorithms, which we'll talk about in future videos. The other thing is you want to control emotions of greed and fear to consistently profit in a bull and bear market. And we're going to talk about this on the next slide regarding consistency. So if you make an effort to learn the methods that I'm going to be explaining to you and also on the mastering, you're going to get to a position where you're going to know more than 90% of all people that are in the market, probably even more, okay? So the art of the technical analysis for market success. So first off is consistency. You want to be very consistent with your method. If you have a good method, you stick with it and you don't switch back and forth. See, unfortunately, a lot of folks is they try a method, it works really well, and then they go back to relying on financial news and Wall Street for expert advice, and they're saying that this is a changing market and the market is basically different this time. And then they change their strategy, and then then all of a sudden, it's like going to medical school, and then all of a sudden you start practicing naturopathic, and once you're done with naturopathic, you realize you want to do dentistry, and but you still want to treat the tumor, right? It doesn't work that way, right? You need to find a consistent plan, and risk management is key. Now, talk to any professional day trader, they always tell you risk management, right? So again, this is from the, my heart, my fundamental heart is hurting, but this is from a technical analysis perspective. Don't rely on reading today's fundamentals. The market is a discounting mechanism that sells on future expectations. Whenever you look at a particular stock, you have to understand that there's some type of reason why this is basically dropped. And regardless of what that reason is, if you know how to day trade that, you can basically look at the indicators and the price action, you're able to profit off of that, which we'll explain in this video. So technical approaches can assist in understanding the market's view of both current news and future projections, which I just said that, right? And the thing is, technical analysis is an art. Not everyone who uses it is going to be successful, right? Because at the end of the day, everyone looks at art differently, and sometimes people's brains are wired differently to where they freak out and they become emotional. Which I think that the most successful traders, I would say, at least from my books, are ones that really don't rely on that money. If you have, like for example, physicians that are, their bread and butter is medicine, they can go ahead and learn these itemizations, and this is not money that they are attached to, because they know that they're going to be making an X, Y, and Z amount the next month after that, right? Because if you cut that, the point is, if you cut that emotional burden off, you can go really far. All right, so no one can essentially perfect the market, but this approach, which I'm going to basically show you, is going to help. Okay. Now, insider trading unveiled the power of technical analysis. So many day traders focus on keeping up with the news to make trades. The unfortunate part about this is, as soon as it hits the news, it's already late. The people that already made those trades, if you haven't realized, a lot of those stocks usually have a pre-anticipatory bump that's very significant. And it's like, wait a minute, how did that happen? But essentially, you would have been able to pick that up if you know exactly what you're looking for. Now, however, again, by the time the news reaches you, the public knows it's too late. Using charts and specific indicators can help you identify insider traders and buying. Again, the stock market reflects greed and corruption, but math can be, essentially determine unusual changes in price and volume, which is what technical analysis is. Now, the game of the market, understanding the odds for consistent profits. So, savvy market professionals know to buy on bad news and sell on good news. That's what if you heard a lot of folks, sell the good news, right? Buy the fear, sell the good news, right? Stocks form bottoms when the news is bad and tops when the news is good. Typical traders and investors make mistakes by buying near the top and selling near the bottom. Now, the reason for consistent losses by the public and consistent profits by professionals is the difference in their rules of playing the market. The market is similar to a game of poker, where professionals understand the odds and make informed decisions, while amateurs let emotions guide them to losses. So the biggest profit-making machine is knowing when to get out from an unprofitable trade and knowing when to recognize this is an unprofitable trade and not letting your emotions dictate you into holding a trade that's basically losing. All right. Now, unleashing the power of technical analysis, 6 rules for making profitable stock decisions. So number 1, check the chart before making any stock purchases or sales. Avoid buying a stock when positive news is released, especially if the chart shows a significant increase prior to the news. Now, this is a big deal because if you look at Palantir, it just recently shot up, right? So try applying this knowledge already to the stocks that we've already discussed and the stocks that you may have already looked at. Number 3, don't buy a stock simply because it seems like a good deal after experiencing a decrease in value. This can lead to further losses. Don't purchase a stock that is in a downward trend, as this will be discussed further in like what we're going to have in this presentation right now of how to look at that. Don't hold on to a stock that is downtrended, no matter how attractive its PE ratio may seem. This may lead to further losses as well. Now, again, this counteracts Benjamin Graham's ideologies of finding the intrinsic value. But again, if you merge these two things together, you can become an unstoppable force. All right, maintain consistency in your approach. If you find yourself making inconsistent decisions, there's a defect, there's a deficiency in your discipline, and this needs to be fixed. All right, folks, this is going to be a conclusion of part 1 of Technical Analysis 101. We're going to go ahead and create a part 2 and essentially respect your guys' time to make this video shorter, and we're going to go ahead and talk about the other itemizations that I have in this presentation. If you like this video, please consider subscribing, liking, and commenting what you've learned and what are things that you want essentially this channel to discuss. And if you would like to learn more about what we offer, there'll be a link down below at allstocktrades.com. I'll see you on the next one.